Good morning, everyone. Ben Buckner and Dan Bossi back with you on Monday, the 22nd of September. We're a week away, or almost a week away, from the grain stocks report and the final small grains report on the 30th. That'll be next Tuesday. But we do have big news this morning. It's late breaking, and so we may not have enough slides involved here. But nonetheless, we can talk about it. Argentina appears to be, of course, abating its export tax completely on corn, soybeans, soybean products, and grains. Now, the talk of the Argentinians is that it's $7 billion worth. Now, if I only put that in soybean or soy product equivalent, that would be a massive, like 13 or 14 million metric tons. Of course, it won't be that large because there's grains involved. But nonetheless, there's also discussion that maybe Milei will be willing to do this heading into the new crop. So when you're looking as farmers in South America or Argentina, and all of a sudden finding 30% more for your crops because of a tax abatement, that's a big deal. And I would imagine that the Argentinian farmer will engage with some sales here once the dust settles and he understands the program more importantly. But we are seeing that Milei will be having discussions today with Trump. Of course, the Argentinian currency market has been under siege. The peso has dropped, and Milei is now trying to do what he can to, of course, counter that and, of course, bring freer markets to Argentina. So, Ben, in the background, I've got that for you here this morning. That's a bearish anvil. One of the problems for the bean market is next week, China's on holiday. They've been buying, if you will, in the market, or at least when they buy Brazilian soybeans, we get a buy order in Chicago. But I'm not finding buying this morning in Argentina or Brazil. And we know last week that, of course, Trump and Xi did not get together, and we're still in this avoidance of U.S. soybeans by the Chinese. Over to you, Ben.
Yeah, I think the Argentine tax kind of adds to the weight in the markets we've seen overnight. And it seems like things are just getting a little looser. Maybe the market, given what's happening in Argentina, crop progress in South America, harvest, et cetera, maybe less concerned that we will see further trimmings of yield in the Eastern Midwest and probably nationally, but it doesn't really change the fact that we're going to have way more than 16 billion bushels of corn in the next 60 days come to the marketplace. So I think the December corn, you can see a chart here, once again testing its 50-day moving average. We'll see if that holds, but it does look like at 430 there has been some shedding of risk premium. So in corn specifically, we will see how the market reacts to the news out of Argentina, but it does look like pretty strong resistance stays intact. And I think to your point about Argentina, Dan, what's happening in the soybean market is it's kind of breaking down. You see that we're below all key moving averages except for the 200-day moving average. And so probably this foreshadows, especially given the speed of the break the last 2 or 3 days, another test of 960 to 980 November soybeans. So that's what the chart pattern looks like. That's what we're stepping into as we start trading this week. And we've all been kind of waiting for something to happen in the markets, and it does look like the next move in the soy complex at least is going to be down because of harvest progress, what's happening in Argentina, what's happening between the U.S. and China, and what's happening in South American weather. So it's hard to really sink your teeth into any bullish input this morning. So it's pretty easy to see why soybeans are doing what they're doing. In corn, we have gone through the numbers state by state. We no longer think a lot of the Eastern Midwest, including Illinois' corn yield is going to be above last year. So we are starting to cut based on acute dryness there since August. Really the no rain until this weekend in a lot of places, and of course that is too late. But what we come out with, given we are adding to yield potential in places like Kansas, Nebraska, the Dakotas, Minnesota, Wisconsin, a national yield of about 185 bushels an acre. So that's a bushel and a half below USDA in our previous forecast, and all told, more than 3 bushels down from NASA's original guess in early August. I wanted to show this, and there are a lot of numbers here, but what comes out at the very end, assuming 185 bushel an acre national U.S. corn yield, still have in stocks above 2.5 billion bushels. And so we find it very difficult to come up with a scenario, whether it's yield or consumption, that puts 25, 26 corn in stocks below 2 billion bushels. I mean, you've got to have China come back in bulk, where you've got to have a pretty sizable yield surprise, and we just don't think we're going to have the yield surprise to that extent. So there's a lot of corn. This is still a pretty heavy balance sheet relative to the last decade. So I think that explains the resistance we have seen in the corn market. But you're adding to the concern this morning with what's happening in Argentina to U.S. soybean export to me. And it's something that we've talked a lot about. This is not really a secret in the market, but I think given what happened between the Presidents Trump and Xi's call last week, you can no longer ignore this. We are kind of running out of one runway to get this thing changed. So last week we highlighted total 25-26 U.S. soybean export commitments, 378 million bushels. That's down about 210 from last year, up low since 2008. All that is not insightful, but here we'll put it into context. So on the left, you see the ship lineup on a weekly basis. We can count the number of boats that are being loaded or waiting to be loaded. See that peaks between August 13th, November 2nd at about 4 or 5 million tons, boats loaded with soybeans ready to do something out of the United States. Today, it's less than 500,000 tons. These dates that you see here, when the lineup peaks sometime the middle of October, that's just now 3 weeks away. So I think this becomes an even bigger deal if we can't sort out U.S.-Chinese trade issues in the next 2 weeks or 3 weeks. And on the right, I wanted to show you the math involved and why we've been so focused on this. And really, it's been pretty alarming is case analysis. So the graphic you see on your right is export commitments, soybeans, as a percent of final, or in the case of the current year, as a percent of the USDA's forecast. And we've sold just 23% of the USDA's forecast. That's what that number represents. If we assume the very low end of the recorded range, that current commitments, 380 million bushels, represents 25% of annual soybean exports. Soybean exports will be maxed out at 1.5 billion bushels this year. So you're already taking off, another 100 plus million bushels from the USDA's forecast. That offsets a lot of yield. If you assume that, like last year, current commitments are representing 31% of final exports, then you come out with final U.S. soybean exports in crop year 25-26 of 1.2 billion bushels. That is down over 400 million from the USDA's forecast. So the devil will be in the details. We will monitor this pretty easily every week, but just wanted to communicate the loss of export demand in the soybean market because of what's happening between the U.S. and China is incredibly robust. It is very important. We're talking about hundreds of millions of bushels that, of course, more than offset any yield scenario almost. So that is what the market's beginning to reflect. We've got bearish news out of Argentina this morning as well. Maybe that adds to Argentine soybean exports a little bit over the next 30 days, 6 weeks or so. So a lot of competition for that remaining market, the non-Chinese market. Also in the background, unfortunately, this is all leaning pretty negative. We do have planting progress as expected, starting in Mato Grosso, Brazil. I guess technically planting progress, 0.6% of the crop is planted, is double what it was a year ago, that we're all splitting hairs. But I do think, unlike last year, we're going to have pretty normal evolution of rainfall. So you're probably going to have 50% of the Mato Grosso crop planted, by the middle or second half of October. So that's just a very normal crop calendar. Harvest dates will be normal. If weather is normal, of course, you've got yield potential over last year because it was so dry during the beginning part of the last year's growing season. This is what weather looks like. So you're starting to introduce humidity in Brazil. Kind of the beginning of the rainy season seems to be upon us. On the right, on the left, you see 3-day rainfall accumulation. And on the right, you see the 10-day forecast. So it's not a complete beginning of the soaking part of the Brazilian monsoon, but it is pretty normal. It's starting to expand into more central parts. Northwest Mato Grosso is going to get an abundance of rain, up to 2 or 3 inches. So you're going to see these planting progress numbers updated every Friday afternoon start to look like or better than normal. I think we all want to be prepared for that. And then just looking at the Argentina again, the complete end of drought, and really in the last week, the establishment of surplus soil moisture in most places. I don't think this foreshadows yet anything related to corn and soybean yields, but did want to highlight that the Argentine wheat crop last week was rated 85%, good to excellent. That is the highest in the Buenos Aires Exchange's record keeping that started in 2018. So yield potential, probably the best it's ever been. You're probably forced to add 1 or 2 million tons to Argentine wheat production. And so if this continues, I think by November, we're going to start to see the early corn crop rated similarly, unless there was a change in the weather pattern there. So a lot of things going on, but it does seem to be pretty negative, and we're stepping into lower markets this morning. Supplies on paper, I think, getting bigger, grains and soybeans, and of course demand competition also getting more intense because of what's happening in Argentina and China not buying U.S. soybeans. So that is what I see the markets trading this morning.
Thank you, Ben. It's still managing risk, right? And that's we're not cheering for lower markets. We're just trying to manage risk relative to our analysis. And unfortunately, our analysis is still bearish. But there's a lot of other news going around the market. We found a new screwworm this morning, 70 miles from the U.S. border in Mexico. That's likely to keep the border shut down there, probably until the cold season of late November, December. And there's a lot of talk also that the U.S. government is looking at some kind of program for retention of heifers going forward, so we can rebuild our cattle herds. So I throw in cattle. We don't talk about it very often, Ben, but I do think this morning's screwworm find only 70 miles from the border of the United States is important and something that the cattle industry will be talking about. Thanks to everybody. I appreciate your time here this morning. Dan and Ben will be back tomorrow. We'll see what the markets take us here today, but we're concerned about Argentina's announcement, China's avoidance of U.S. soybeans, and of course the ongoing harvest. And then next week's, of course, final September stocks reports. That's going to be very key to the markets longer term. You all have a good day. Happy trading. Happy harvesting. Be safe, everybody. We'll be back tomorrow.